the next thing you could kind of look at in all this, if that's not your visual, if you're not picking up those visuals, is just looking at this price action, seeing the breakthrough, sell side, again, only of relevant price, ignoring that time between after the London kill zone and before the open. So we're looking at relevant price action. So we have two shifts, strong bearish candle, leaves a classic fair value gap. All right, let's see if we can do something with this. And I want to focus on this principle of time, like how and where to kind of determine the setups. So why do I not want to trade Asia? Why do I not want, for indices, not want to trade this overnight from London until New York? So first off, where are the biggest participants? So volume indicator shows, I mean, there's nobody working. There's no liquidity being provided, nobody being raided really going into Asia. We have a small kick up in London, so that's 3 o'clock, so we're looking at the kill zone from 2 to 5. Then once that kill zone hits or ends, like volume actually tapers down. So after that little blip up in volume, we don't really kick off anything until 9:30. So time first, then price. But what is this volume using as a reference? So let's lock that off. So we know we've got a consolidation. There's no central bank here, so we're just using the Asian range. But we also have this, I want to call it like so I've heard it on YouTube called overnight session, and it is the time between the end of the London kill zone and the start or going into the AM. So using this reference, what I want to look at is what would that price action starting at 9 o'clock and then kicking off at 9:30 use as a reference point. So let's push this in front and try to imagine that that was really not even there. So with that price gone, one thing that I would be looking at is, had I not recognized or wanted to believe that this daily fair value gap, which to be fair is not a clean gap, it has been run through several times before. So even up on the daily, here is that daily fair value gap. So it's been worked through, wicked through, closed through, and retested. So it is a price gap that we're referencing all the way later in time. So back to this idea of time then price and referencing the hourly or the 5-minute, right? So at this point in time, when price wakes up here, or our reference of price is here, I am looking at any arrays within this run up. Again, without the context of the daily fair value gap, price simply started here. So I would be seeing this fair value gap, this mitigation, this fair value gap, and this volume imbalance. So I'm going to mark those out. Let me pause. Okay, so here are all the arrays on this bullish leg, ignoring the price action between this overnight session. And like I said, the reason why I don't even want to really consider this is the after this volume kicks off, which could have set off a trade, there's really nothing happening. There's no reason to be looking here unless you're trying to be the Nostradamus. But this journal entry will help to pull back some of those emotions that I'm feeling about wanting to get in early, and similarly trying to get in early on Asia, and reinforce that, I mean, there's nothing to do. There's no need. So let's break that down. So let's zoom in. Let's go full screen now. So here's what we got. This fair value gap above before price jumped up. This fair value gap below, which is inside of this bullish run. It's the second fair value gap in this bullish array and the one in the lowest 50%. This mitigation, high or low, high, high or low. And then within the mitigation is a fair value gap, and within that is a volume imbalance. So because we have arrays in the mitigation, we're going to refine that right away. We don't need the whole mitigation. So I'm going to stick that out into the future and just hold on to that for a second. That's the mitigation area. So here's what we see. We see that price is opening below where it left off. So that in and of itself is a suggestion that price is not trying to be bullish. If price had opened above where we left off, then a retrace to a discount array would make sense, right? I mean, a lot of my entries are retrace entries of some form. See the setup, see the gap, return to the order block, return to the volume imbalance, which is different from doing a turtle soup, like buy on the sell on the buy stop, buy on the sell stop. So the next thing, so price opened below where we started. Now, I mean, we can see in this price action that it is very choppy. So there could be an anticipation of being bearish, but taking these sell stops and possibly jumping back into this daily fair value gap. Let's recognize for a second that we went below. So this array then gets tested or reclaimed. So this array gets reclaimed on the other side of this overnight session, and we do not even retest that point too tough. It's like basically right on the mark. So that's a old high that splits a fair value gap, down candle that splits a bullish fair value gap. Price comes right back to it twice, one at 9.15, one at 9.25. So why would we anticipate bearish? We respect arrays through price. So this daily fair value gap is being reclaimed. Bullish fair value gap being reclaimed to be bearish. We're below where we left off before the overnight session. So price is below that when we open back up at 9. We retrace into that. So that would be clue number 1. Is this bullish or is this bearish? Will we respect it or will we not? 9:30 opens up. Explosive move through. This would not be indicative of bullish price action. So if this was step 1, then this is step 2, which is the downward movement. And now we can look back at these arrays to be reclaimed. So had there been an entry here to go long, where it did respect that volume imbalance and started to inch higher, but once it ran through, now we're looking on the other side of the mitigation, the other side of the volume imbalance, stop being above the high, and retesting 9.35. We want to go back. That's when we're going back to look at price, and that's where we see these arrays get retested. We then see one more time the mitigation block gets tested. So price is respecting it, bodies are staying within. More accurate entry, price breaks through, price retests the mitigation block on this up candle at 950, price gaps down, starts retesting the yearly open, price breaks through, and there was a 10 o'clock news event, so even if it was being more conservative, even more conservative, waiting until 11, so that's step one, is that it's rejecting the other side of these arrays. Actually, I guess step one is that it opened below. Step two is that it's respecting the other side of these arrays. Step three is that it's breaking through those arrays. Step four is it's breaking through higher arrays. So there's a lot of reasons why we would not be looking at this being bullish. So now let's jump into some actual setups. So conservative wait until 11 o'clock. We see that price opens up at 11, pushes up one more time. It's now below Asia, which is like step number 5. So now we're below Asia completely, which if this were a delayed protraction, we would only be seeing bullish runs, even if it's deep retraces into this leg, and price would not get below Asia. And let me just get that profile real quick. So here's our delayed protraction, meaning London is not pushing bearish to go bullish. It's delayed. It's happening later in the day. And so we would expect that when we get into this mini time window here, just before New York open and just after the London open, price would seek some form of discount. Seek that discount, make a higher low, and then push up at least until noon. So we don't have any of that. Everything we have here is suggesting that we're on the other side of this curve. We're now on the sell side, and we are 1, opening below where we left off, 2, respecting an array on the other side of the curve, 3, breaking through the arrays and retesting them very nicely, 4, breaking through the larger array and then retesting it, and then 5, we're now below Asia. So everything in this AM setup, AM session is speaking to bullish. Is speaking to bearish, excuse me. So you got to be nimble. The next thing you could kind of look at in all this, if that's not your visual, if you're not picking up those visuals, is just looking at this price action, seeing the breakthrough, sell side, again, only of relevant price, ignoring that time between after the London kill zone and before the open. So we're looking at relevant price action. So we have 2 shifts, strong bearish candle, leaves a classic fair value gap. Nice test, even kind of refined that to the 50%. An interesting thing about studying ICT, I'm sure there's a section on this that I just haven't gotten to yet, but at no point in time am I looking at necessarily big figures. But if I were, because most of the times when you're looking at this stuff, you're not even, I mean, for me, I'm not even looking at the literal price level. I'm just looking at the price action. But we are still around the 33,400 big figure, if you want to call it that. And then 50% is 3406, and then this price high comes in at 33,407. And this is on currency.com, so this is CFD. Only other thing here, which not exactly what I would be looking at, but it still counts, is that we would have a mitigation on the other side of this curve, which is this price action here. That low. So we can also call that a mitigation. So that mitigation gets touched here. So breaks through, retest the mitigation, which has a fair value gap, 50% gets respected. That's the AM setup on a 5-minute chart. So you have to, 9:30 you're waiting, 9:35 you're open. 9:35 is action time. So 9:35 creates the fair value gap. 940 comes into it. Nice break below. Retest the mitigation on the other side on this candle. Gaps down. Comes in to retest the gap. Now we're below the yearly open. Conservative wait for 11. So let's pick back up here. So conservative wait for 11. Now we're ignoring the AM. Let's call it the news portion of the day. So let's do that. So if we ignore the news portion of the day and we're only paying attention to where price is at 11, even though we may, that's not what I wanted to do. Even though we may look at the price action that happened in the news, we are not using anything in the news leg. So even though we're paying attention to it, we're not using anything in that news leg. Oh, this is going to be tricky, eh? Let's do that. Yeah. And let's just do that. So even though we're not using anything in that news price action from 10 to 11, we're paying attention to price action after 11. And then, of course, we're going up until 12 o'clock. So validating and invalidating times, one more time. The reason why you're acting now is we see that there are no participants, there are meaningful participants where liquidity can be generated, taken, manipulated. So first thing we see as we jump off into that time frame is we leave a bullish volume imbalance. We see a change in the state of delivery. We have a fair value gap. So that validates a raise on the trading leg. So as this is now our dealing range, we're looking at price action within the premium side of that array. So that is everything. How do I get? I guess I don't have it. So that's everything in the premium side of this array. And we can continue to sell so long as we stay in the premium side of this array. So I feel like it's pretty straightforward. I don't need to color code the journal entry like that. But here's that bearish gap, bearish volume imbalance, change in state of delivery, consecutive candles down, right time of day, time is on our side, retesting into anything in the premium. So we've got this fair value gap, we've got this order block, we've got the volume imbalance. We don't quite get into the rejection block, and we don't get into the 50% of this large wick. So price respects that right at noon. So I would have preferred to see 11:45. Price comes into that, so we get that one-time run. But that's fine. If that wasn't the trade, then we simply do it again. Bullish volume imbalance, change in the state of delivery, right time of day. So we need now the PM session. And so here we kick into it at 125. So a touch early on that volume imbalance, stop above the high. In this case, it doesn't get to the highest candle to validate the order block, but on the 15-minute, this order block would be valid, which is what this profile is calling for. So let me just pull that one up. Okay, so here we have the it's not that one. That is it's the back half of that one, but it's not the opening, is it? This would be I mean, it's either a consolidation profile, so let's look at both of them. So it's either going to be a consolidation profile where we're looking for something to go below the lunchtime low. So this is at 1 o'clock low. Go below the lunchtime low, some sort of SMT on the lows. Let's see if we have that. Not with NAS, but maybe with SPX. No, not with S&P. So let's break this down. So what I'm looking at here is I'm seeing here's our lunch, 12 o'clock, 1 o'clock. We're seeing price come back into a 15-minute array, and then a movement down to clear this sell side, which is a lunchtime low. Clear the lunchtime low, and then reverse. That's actually not too helpful in this case. So let's slide those across for a second. So after we get this push up on post lunch, 15-minute order block, refined on the VIB, volume imbalance, nice entry, retest down. The 1 minute chart also gives a beautiful retest here. So this is not as clean, changing the state of delivery. One test up, push down, doesn't come back to it quite as much, and doesn't come back to this one either. Just mark it out real quick. Yeah, it doesn't come back to that one either. Pushes down. Let's go back up to the 5 minute. So the validation here is that we are okay to act on volume imbalances with price action after 11. So we're looking at whatever price action is running after 11, and we're using the PM session as a setup. And the PM session gave this beautiful setup here right on the lunch. That was the first trade. And then the second one was a volume imbalance here right after lunch, which was a beautiful one. And then we had an M1 volume imbalance here. We didn't quite get a test on the other ones that got created below. So what happens next? We run the lunchtime low, and I've seen this happen a few times this week where we'll run our lunchtime low. You would anticipate just further running, but the macro profile still holds. So this is a Thursday low profile with a consolidation. So this profile is where you anticipate Friday to have a bit of a kick up. So here's what that profile looks like. So once we make a Thursday low, we're anticipating some sort of bullish run above these buy stops, but we don't get that cleanly. Like, that's not the macro. However, we don't go below Thursday's low. So Thursday's low is here. Price doesn't run Thursday's low. It still stays true where it will not run Thursday's low, but it didn't do this massive bull run, which was kind of anticipated until we saw this breakdown in price. So what it does instead is run sell side, creates a breaker, runs the breaker, retests it very nimbly at 3 o'clock. And then once that does that, then it just pushes up and takes everybody's stops, even including the one that came up and ran above the lunchtime high, and then closed out. So unless you're, the only other thing I could think of here looking at this narrative is up on the hourly chart, because price had been running bullish for so long. If there were short sellers or people who are short since Wednesday, they are now deciding to take their profits. That's the only other narrative that I could draw from this. So really wanted to just walk through the implications of time, where time is less, or where time is so important that you have to ignore price. Like, time is so important between the end of the London kill zone, and it is so important to wait until 9 o'clock that you are actually ignoring price. Price does not even come into the equation because time is overruling price. Similarly, with a news event, you're ignoring price and you're paying attention to time. So a time marker like the yearly open, which had relevance whenever it was above or below, becomes more important because that's a time marker, and it is less important about price. Then once all of that is done, then we can start applying price with time, but time is what's the factor. So at 11 o'clock, now we can use some of those tools. At 1 o'clock, we can use those tools. At 3 o'clock, we can use those tools, but we're not doing anything until time is aligned. So importance of time, then price, and one validating topic was volume. if there's no participants here, then why are you working yourself up trying to get in early or get positioned early? You don't even need to do any of that. You can wait, and you can use your 9:30 a.m. session, which I'll start working on now, since we've done so well. About 3 months of PM session, feeling very comfortable with that. So 10 to 11 is the time. So we're waiting for news to pass, but you've got this AM setup. Zoom back in on that real quick. And not to over talk it, but you're ignoring the price action until there's a certain time for you to act. Then you're referencing price, other side of the curve, sell side, waiting for 9:30 to pass. Earliest action is 9:35. Then you're acting, waiting for the news event to pass, 10 o'clock to 11. Then you're acting, waiting for lunch to pass. So we're actually not using anything in this lunch leg. This is actually taken pre-lunch. So there is a technique to use a lunch macro that I will use, but I want to highlight just this whole concept of ignoring price until it's time. Once it's time, then we're referencing price when it was relevant, and now when it's relevant again, we're applying our tools. Then same thing, we see the run, we see the time, so we're not seeing a 2:30 continuation. It just simply retests, sweeps below, sweeps one more time, doesn't go below Thursday. 2:30 to 3 doesn't give the continuation, so 3 o'clock to 3:30 should give something opposite. Like even here, like this fair value gap, if it was bullish, filled it, gave you a chance to get out, and then push through. Sweeps the low, comes back to the fair value gap where you may be thinking it's time to go short, gives you a chance to get out, and then pushes away. I wonder what it looks like on the 1 minute. Oh my goodness, like just look how beautiful this is. So we don't quite get the fill on this volume imbalance. Not quite. So price comes through, changing the state to delivery, comes back up, doesn't quite get into that volume imbalance on that candle right here. Doesn't do it here either. We go through the fair value gap. Now we're on the other side. If you weren't sure if we were really going to be bullish on this breaker on the 5 minute, then the price action inside the fair value gap tells you that we have a swing point, we go down, we break it, we have an order block with a volume imbalance, we have the fair value gap which qualifies the actual order block. Like it cannot get prettier than this, man. It cannot get prettier than this. And then you even have another mitigation, again with the context of time and then referencing price. Another mitigation, nice touch here, and that's just beautiful. So yeah, love looking at this stuff. I think the whole intention of this entry is just to reinforce the concept of time over price and how to validate or invalidate certain times. And one way is simply to look at how many participants are active right now. We need liquidity in order to make moves, right? And the algorithm is going to seek liquidity or fill an imbalance. So if it's running for stops or filling an imbalance, then we need that activity in the market to support that, right? The algo needs food, it needs fodder, and so we're waiting for that. That's how we validate or invalidate the times to act. And now I'm starting to introduce AM session setups. So reference points previous and action times at 9:30, 5, not 9:30. All right. I don't know how long this one was, but I got pretty excited about talking about the price action. Let's do it again.